What's up guys, Dirk here. It is October 13th, Thursday, and today there is big news coming out in the US, which is the CPI data, which is the inflation data. It's coming out at 8:30 a.m. Eastern time, and it seems like the whole market is watching this for a direction. So we're probably going to get a major move later on today based on this data. And in this video, I just want to give you a quick update on how the markets are setting up to potentially which direction this could go in. So let's dive straight into today's video. If you are new, welcome. Click the subscribe button down below, click that notification bell. That way you get future updates whenever I upload a video. And if you want me to email you whenever there's an update or whenever I want to share something important with you, first link in the description down below. Just click that, enter your name and email, and you will get those free updates whenever they are available. Alright, so diving straight into this, Bitcoin is currently trading at 19,100 approximately. This is the weekly chart, and as I shared in my weekly update on Monday, you can go and check that out. It is on the channel. I will link to it up here also if you haven't seen that yet, where basically I discussed the weekly. Look, we are under the 200-week moving average. We're sitting on this all-time high support. The all-time high of 2017, which has now become support. We've been sitting on there for weeks and weeks and weeks, and just like in 2018, the longer you sit on that support, the more likely is the chance that it breaks down. I will show you the S&P 500 too in a second. That is sitting right on the 200-week moving average. So right now, we are literally sitting on the edge of a cliff, and if this news is bad for the markets, I think we sell off in a big way and we finally break the support. There's all sorts of things that are also lining up otherwise. There's also some astrology type stuff with an eclipse happening at the end of this month, which also, if you go back in the past and you look at what happened in financial markets during those eclipses, it doesn't look too good for the markets. Basically everything is pointing towards bearish. There is also always a possibility that somehow something happens, that we reverse and somehow we bounce from here. But I think based on everything, how the charts are looking, the macro, the data, everything that's happening right now, the odds favor more downside. And we could scam wick, so we could get the scam pump up a little bit first, which is likely to happen anyway on this news event. We are likely to see a big wick in both directions to take out those leverage shorts that are betting on long and short very close with high leverage. The price just wicks both ways to take them out and then goes on a major direction. In my opinion, the risk of more downside and us eventually going down to somewhere between 10 and 14,000 is still very real. As I've been saying in the weekly and the monthly updates that I do here on the channel, we are still under a lot of basically bearish moving averages and signals. And as long as we are there, until we get that bullish confirmation, the trend is still down and there's still more downside to go, in my opinion, unless we can reclaim an important level. Right now, let me zoom in a little bit first on daily over here. So what I would want to see at the minimum, let me get rid of this real quick. What I want to say on the minimum for us to start getting more positive, we need to take out these highs over here. That would also be taking out or reclaiming the 50-day moving average, getting above, this kind of meme trend line over here that retail investors like to draw. If we get above this level and above these highs and we can flip that, I think there's a decent chance we actually run back up to potentially 24 or 25K. That is very much a possibility. Until then though, you can see how much we're sitting at this support over here, which by the way is very close to the all-time high of 2017. And basically in technical analysis, the more times the price tests a level, the more likely it is to eventually break below it. And also you can see, because every time we did bounce off this level, from this point on, after we made that high of 25K in August, every time we went down, we bounced, we created a lower high, and we're sitting here. And sure, we could still wick up a little bit, right? On this news, we don't know what the event is going to be, how the data is going to come out. There's a lot of open interest, so a lot of people are betting with leverage, both long and short. So it would be possible, or not impossible, for us to wick to potentially as high as 20.5, maybe if there's something going on with that news, and then still come all the way back down. So I'm looking for a flip of 20.5 for potentially considering a run to 24 or 25. As long as that does not happen, we're looking at potentially a breakdown. And if that breakdown happens, it can happen quickly, and we can go from 19K to 16 or 14 or 12,000 pretty quickly if the news is bad. And is the news expected to be good? Well, we can just think logically, what is happening in the world? Do you think inflation magically went away? Probably not. Do you think magically all the problems in the economy are fixed? Probably not. So what is going on in the world right now? It's bad, and the data is probably likely to be bad. And if the inflation is still high, it means that the Fed and the central banks are very likely continue with their hawkish stance, to continue to even increase rates even further, which would be negative for the markets. If the markets, that's what this event is going to tell us, what this data is going to tell us. If the inflation is still high, the market is going to anticipate that the Fed is going to maintain their hawkish stance, that they're going to continue to raise rates, which is probably going to result in a sell-off. And as you can see, the timing and the coincidence of how this is all playing out on the charts are warning us that we are literally on the edge of a cliff, and this event is probably going to send us in a direction, and my guess is it's going to be down. Unless we reclaim 20.5, even if we wick, we can have a $500 or $1,000 wick on Bitcoin and still come all the way back down again. So S&P 500, I also shared this on Monday in my weekly update. We are sitting right here on this 200-week moving average, and you can see how important that is on the past. A lot of people are watching this. Wall Street is watching this too. Retail traders are watching this. We go below this, I think there's a lot of stops, and a lot of people are just going to decide, hey, we're going to cut our positions because a break of this is probably going to lead to more downside. And by people deciding this in anticipation of what's going to happen, they actually help create it, because if it starts going below and stop losses start getting hit and people just start closing their positions because they fear it's going to drop, they actually create that drop. So it's like a self-fulfilling prophecy pretty much. And we could see something like March 2020 where we drop, if you know, I think I've shown this before, but you can see that was a 17% drop below the average. So if that happens again and we drop below this 200-week moving average, you can see a 17% drop would take us to just under 3,000 on the S&P 500, which is pretty hectic, which would likely, if that happens, we're probably going to see Bitcoin go down somewhere between 10 and 14,000, like I just explained. We're sitting right here on this moving average. So this data, if it's bad, and my guess is definitely not going to be that good, because I mean everything in the world is still broken in a way, the economy and the inflation, it's all bad, right? So maybe we bounce, maybe something can happen, but more likely than not, I think we break down. We get below this 200-week moving average, and there is 10, 20, 30% downside potential on the S&P 500. And if that happens, well, if Bitcoin sells off 30, 40, 50% potentially, altcoins are probably going to sell off that amount or even more. So we could be looking at a major sell-off in the markets, potentially starting today and lasting for the next couple of weeks. Also because there's just a lot of alignment around, like I said, the eclipse. There's a lot of bad data. There's the midterm elections that are coming out next month also, which historically has been led to a rally leading up to that. But this year could be different. There's a lot of chaos in the world. So who knows what's going to happen. Just putting this out there to warn you, we are at the edge of a cliff. There's not much needed for a tiny little push for us to go down that cliff. And then eventually, hopefully that's going to be a good thing, because if we do sell off fast enough and deep enough, it could lead to the bottom of this bearish trend with a quick recovery, and then working on the recovery phase towards hopefully going to be some sort of pivot by the central banks sometime in 2023. And some sort of recovery. That's what I'm hoping for. So let's see how things played out. Remember, back in 2018, the bear market there too capitulated in November of 2018. So just to go back here to the Bitcoin chart real quick before I wrap this up, same thing. So like I've said, we were bouncing on that 6,000 level. Let me zoom in a little bit more over here. We were bouncing on that 6,000 level for months. And then finally we got our capitulation in November of 2018. You can see where it dropped another 50%. So we are middle of October right now. We are sitting on this horizontal support in a very similar way for weeks and weeks and weeks. Another month is November, so this time frame could get a similar capitulation type event as we did in 2018, which then marked the bottom of the bear market. And I think if we get that again, it would probably be the bottom of the bear market. Can't say that with absolute certainty, but that would be my opinion. If we do get that sell-off and we go to 10 to 14,000, potentially starting today, but sometime within the next few weeks, and we get our bullish divergences, this was followed by about 6 months of accumulation. So we get that drop, doesn't mean we're going to bounce right away. We could, but probably more likely to expect 3, 6, 9 months of sideways after that point, and then hopefully the start of a new rally and the start of potentially a new bull market after that. So obviously we're talking about the next 1 to 2 years for that process to play out, if it plays out in the same way as 2018. So be prepared, be careful if you're doing any sort of leverage trading. Of course, manage your risk, and let's see what that CPI data is going to bring for us this week and what is going to happen. And until we get bullish confirmation, right, like I've been saying for the last months, until we reclaim those key moving averages, for me at this point it's about 24,000. Until we get that, there's no point in turning too bullish too quick, because there is still potential for more downside. And if you deploy all your risk capital now and it drops 50%, well, you know, obviously you're going to be kicking yourself, because you'd rather prefer to buy lower if at all possible. And you know, that's just how you have to look at the charts and let them guide us rather than our own opinions and our own emotions. And for now, the charts on the higher term time frames are still bearish with possibility of more downside. Once we get bullish confirmation, I will be probably among the first to make a video about that and to share my thoughts and to really start to talk about the potential of more upside. But for now, we are looking at more downside as in terms of probabilities than upside, in my opinion. Thanks for watching. I hope you enjoyed this video. Smash the like button. If you did, share it on social media. I would really appreciate it. Just copy the link, put it on your Facebook, put it in Telegram, put it on wherever you want to share it so more people can see this. And if you haven't yet subscribed, subscribe down below.